Investing in stocks and cryptocurrency. The biggest scam in history. Investing in stocks is the greatest scam in the history of wealth management. Greetings to all of you. I'm FortuneCraft. Why is it that our stock market has so many losing investors? The most painful thing in life isn't losing money. It's losing. What does it mean to lose everything? During the 2008 financial crisis, I witnessed almost everyone who played the stock market appearing on TV and in newspapers with faces full of anguish. Some even prepared to take their own lives as all stocks plummeted. No matter what you bought, you lost money. At that time, people only thought about two things. 1. Should I sell my stocks right now? 2. If I don't sell, what if the losses get even worse? They compared their money to water being boiled, evaporating and disappearing without a trace. Then they blamed the government, the economists, saying the policies couldn't save the economy. This is exactly why the stock market has so many losing investors. They lose money but don't know who took it, and then they blame technical analysts or their unlucky fate. The stock market is a zero-sum game. If you lose money today, someone else is surely making money. It's like gambling. If 10 people each bring $100 into a casino, even if you win everything, the most you can walk away with is $900. Because that's all the money in the game. So the question is, during a financial crisis, if everyone around us is losing, who exactly is taking the money? I once read a survey that said the average loss per investor in the U.S. stock market is about $10,000 to $20,000. The important thing isn't the number itself. It's that if you invest in the stock market and lose less than this average, you're already doing better than most. The long-term rule of the market is that the majority of the money doesn't stay in the hands of the masses. It ends up in the pockets of a tiny, powerful group. They're divided into 6 groups, and today I'll reveal them, even though I'm not backed by any big forces and might upset some major players. I hope everyone will support me with a like to keep this video from being taken down. The first group is the brokerage firms and banks. Why is it that when you turn 18, you're taught about stocks? Because as soon as you make a trade, whether you profit or lose, the brokers still collect their commission fees. If you don't have money, they're happy to lend it to you with interest. So this group always profits in the stock market. The second group is the government. They collect taxes. The third group is the insiders, like major shareholders of listed companies or certain high-ranking officials. There were once reports that some U.S. officials sold off stocks before the government announced the severity of the pandemic, back when most people weren't even wearing masks and didn't think the situation was that serious. The fourth group is newly listed companies. They issue stocks out of thin air, so some companies that only earn a few dozen million can see their founders' wealth soar to billions once they go public, not from their business, but from the stock market. The fifth group is the legendary investors, those with their own strategies and trading systems that allow them to profit consistently over time. Personally, I'm a trend-following investor, which has helped me achieve stable returns. I follow someone in this group. The sixth group is the predators, the massive investment funds. When the market evaporates, these are the ones who truly get rich. They quietly infiltrate the market. No one knows exactly how much money they have in their accounts, but it's at least hundreds of billions, maybe even trillions. It's enough for them to manipulate the entire market. One of the most famous predators is George Soros. He arrogantly declared that manipulating stocks is the law of the jungle in the animal world, targeting the weak, and never failing. Among these 6 powerful groups, the predators are the strongest because they can control when stocks soar or crash. Fluctuations are only known in advance by these 6 groups because they have a tacit understanding, perhaps from deep analysis or insider information being passed around. I can only hint at it vaguely, but one thing is certain: they make the most money when the market collapses. The more small retail investors join in, the more they profit. So, how do these predators manipulate the market? Why are small retail investors always like fresh blades of grass, cut down, regrowing, only to be harvested again? And how can you become one of these 6 powerful groups? If you watch this video to the end today, I'll risk sharing that with you. My channel focuses on sharing wealth-building mindsets to become entrepreneurs, investors, and rich individuals. If you don't want to miss this information, you can subscribe for free and turn on notifications. First, small retail investors are always in a state of information scarcity. You don't know who's manipulating stock prices or what traps the industry experts are setting. Fall into psychological traps designed by market manipulators. It's no exaggeration to say it's like a mind control game. Those with malicious intent can exploit it to scam you out of your money, or even lure you to dangerous places like Cambodia. Have you ever heard of the Blue Whale Challenge? It's a deadly game from Russia, where participants are fully controlled and threatened by the organization behind it. No one survives to the end. Outsiders might think it's ridiculous, that the participants are foolish, but in reality, those people don't even realize they're playing the blue whale game. Or that the final task is suicide. It's no different from participating in the stock market. Small retail investors don't realize it's essentially a casino. They don't know that if they keep betting, the only outcome is losing money. The blue whale game's mechanism is simple. Each day it gives you a small task, like not talking to anyone for a day, or waking up at a specific time to record yourself talking in front of a mirror. As it progresses, the tasks get harder, like harming yourself, until the final task is suicide. Outsiders might see this as absurd, but the game exploits a fatal human weakness. The more you invest, the harder it is to walk away. For example, you're waiting for a bus and have been standing there for 30 minutes. If I leave now and the bus comes right after, won't I have wasted 30 minutes for nothing? That lost time is called a sunk cost. The blue whale players are the same. By the time the final task, suicide, comes, they wonder, should I finish the game or give up? If I quit, doesn't that mean everything I've done so far was for nothing? They've gone through so many challenges, pushed themselves to exhaustion and pain, so they think, I've come this far, I can't turn back. I can't lose. In the stock market, once you buy a stock and invest money, whether you profit or lose, you'll only keep investing more. Why? If you invest 1 million and lose 500,000, you'll want to recover that loss quickly. The only way is to invest another 1 million. If you invest 1 million and make 500,000, you'll want even more. Next time, you'll put in another 1 million, then pour in both your capital and profits, raising your total investment to 2 million. This is greed and fear. Every scam relies on this. Once you put in your first dollar, the scammer lures you to invest a second. Even if friends warn you, you won't listen. Not because you don't suspect a scam, but because you can't face the truth. You don't want to admit that the money you've spent is gone forever, that the outcome you hoped for will never happen. To escape reality, you deceive yourself and sink deeper. From a young age, teachers told you to study hard to get a stable job later. But when you step into the real world, you realize that to advance, you have to compete with others while worrying about daily expenses. You work from morning till night, then a pandemic hits. Everyone around you loses their jobs, and you're lucky to keep yours. But now, work isn't just about survival, it's a battle of pleasing the boss and the owner. You're stuck in an endless cycle, just hoping not to get fired, holding on until your kids grow up. And then what? You still have house and car loans to pay. Even in retirement, you don't dare rest. Meanwhile, why can we travel the world freely while money keeps flowing into our pockets? Because we've built an automated income system online where customers come to us. What we do is marketing, not direct sales. Now think about this. If the game had told you from the start that the final task was suicide, would you think it was crazy? Similarly, when you first enter the stock market, you're convinced you can make money. That's why stocks have such a low barrier to entry. Even if your parents criticized you or others looked down on you, as long as you're 8, you can open a trading account and have a chance to change your life overnight. Unlike gambling, no one calls you a gambler. They praise you as a financial expert. But in essence, it's the same. At first, everyone just tries it out, puts in a little money for the thrill, and stops when they've had enough. No gambler starts by declaring, "I'll get rich overnight," and become a lifelong winner. But some lack self-control and refuse to accept that they've lost. They think even a small win would be fine. Once that thought takes hold, they fall into the gambler's black hole. They keep betting. But the more they bet, the more they lose. The more they lose, the less they can face the reality that what's gone can't be recovered. They sink deeper into unrealistic hopes, betting even more. This negative spiral drags them down a path with no escape. The gambler's black hole is a black hole because once you take a step toward it, you're pulled into its vortex. What traps you isn't external pitfalls. It's the trap you set for yourself. What drags you down isn't the market. It's the weakness within you. You need to understand that the costs you've sunk in the past are just that. The past. They're not costs you're bearing now. For example, you've waited 30 minutes for a bus, but whether you keep waiting has nothing to do with those 30 minutes. What matters is if you keep waiting, will you be late? Should you take a taxi instead? The stock market is the same. Your next investment decision shouldn't hinge on how much you've already lost, but on whether you can handle more losses, or if using that money to buy a house would be better. These are the things you should consider. But most people can't overcome this barrier. They cling to what's lost. Just like why first loves linger in memory. Was your ex really that great? Not necessarily. What makes it unforgettable is the feeling of being loved for the first time. That's why scammers always have a place in this world. And in the stock market, fresh blades of grass, small retail investors, never run out. The more people play, the more become prey. Experts just wait a few years for these blades to grow, then use an economic event like a past pandemic or today's annual interest rate hikes to tank stock prices and harvest a big haul. So, how do the experts at the top of the pyramid use their massive capital to manipulate the market and harvest small investors? First, where does their money come from? Many sources: insurance funds, investment funds, bank loans, or even pension funds. The government forces you to contribute to, but they control how that money is used. They manage hundreds of billions, even trillions, enough to vacuum up every stock on the market. Next question. How is a stock's price determined? If you've studied economics, you know supply and demand. When everyone wants to buy a stock, but there's limited supply, the price rises. If few want to buy, but there's a flood of stocks for sale, the price drops. How do we gauge supply and demand? By looking at buy and sell orders. Suppose there's just two of us in the market. I want to buy a stock for $10. So I place a $10 buy order. Mr. Belty next to me wants to sell for $10. So he places a $10 sell order. When our orders match, the trade happens at $10. But if I place a $1 billion buy order and Mr. Ike only offers $10, the matched price is still $10. Got it? Now suppose 10 people want to buy at $10, but only one wants to sell. After 9 buy orders are filled, one remains unmatched. If that person really wants the stock, what do? They raise their bid, say to $11. If no one sells, they go to $12. Finally, I can't resist and sell to them. The stock trades at $12. That $12 is now the stock's current price. The next buyer or seller can use $12 as a reference. We call buyers longs, predicting a rise, and sellers shorts, predicting a fall. Stock price movement depends on whether the longs or shorts dominate. This applies not just to stocks, but to gold, silver, tulips, or crops. Anything freely traded follows this mechanism. That's how experts and predators can manipulate prices at will. Suppose I'm a financial expert a few years ago when Bitcoin was just a few $100s. How would I profit? Simple. First, I ensure most Bitcoin is in my hands. I keep buying. Not all of it. Just enough to drive the price up as supply shrinks. Before, many sold Bitcoin at $600. But as supply dwindles, the next seller might demand $800. The gap between sell orders widens. Instead of buying step by step, 600 betters, now it jumps to $800 because fewer people are selling. I don't need much money to push the price up. Once I hold most of the market's Bitcoin, if I don't sell, no one can. I control the price. If someone wants Bitcoin at $1,000, but no one sells because I own it all, I can list it at $10. I could even use $10,000 to buy my own Bitcoin, moving money from one pocket to another. This way I can push the price as high as I want. Suddenly the world sees Bitcoin jump from $1,000. My wealth multiplies tenfold with just $10,000. But even if I push it to $1 billion, it's only paper profit. My assets look 10 times bigger, but to turn it into cash, I have to sell my Bitcoin. That's the real goal. However, when I start dumping Bitcoin to cash out, I might not find buyers, even if I've inflated the price. If no one buys, I'm stuck. If I keep selling, the price crashes, and I might not profit much, or even lose, if buying dries up before I unload it all. So, the key is exploiting gamblers' psychology, short-term thinking, and herd behavior to ensure enough small investors buy in. During the pandemic's worst days, the US government printed money like crazy. Even if you knew nothing about investing, you saw Bitcoin and stocks skyrocket. What do? Most people don't know how to react, so they watch others. When Mrs. Jessica, an 80-year-old neighbor, invests her pension, and you hesitate. But a week later, she moves into a mansion. You can't hold back. You open an account and jump in. By then, prices are at their peak. And you're the one holding the bag, as the experts exit safely. Don't regret it. You'd do it again. You think you've only lost on paper, but you've become the sucker in their plan. Still, as I sell my Bitcoin, my control weakens. If I haven't sold half before latecomers start dumping, the price crashes hard. I need a way to lock in profits without losing control. That's where derivatives come in. Experts use the gap between the spot market, real-time trades, and the futures market, future contracts, to short sell in the spot market, while hedging with opposite trades in futures, securing profits. Here's how I hold most Bitcoin in the spot market and push its price to $10,000. In the futures market, it's still $1,000. Seeing the gap, investors rush to buy futures contracts, agreements to buy Bitcoin at $1,000 a month later, no matter the spot price. If the spot price stays $10,000, they buy at $1,000 and profit $9,000. This frenzy pushes futures prices up. I sell futures contracts at high prices. And wait, when my futures sales match my spot Bitcoin holdings, I've hedged my risk. My profit is locked. On the contract's expiration, I deliver my Bitcoin at the agreed price and cash out perfectly. Got it. Simply put, I inflate Bitcoin's spot price, short it in futures at a high price, and walk away. Many have paid dearly in this market, losing life savings without knowing where the money went. But you're not wrong. You just want progress, a better financial future for your family. Still in a free market with no intervention. The strong make the rules. You have two choices. Become the strong, or follow them. Here's what I'll say. When you have nothing, the key is building a career, not diving into investing. With little capital, winning doesn't gain much, but losing hurts too much. Especially if you're new and can't risk leverage or debt. You need a business that generates automatic income. During the pandemic, traditional businesses took a hit, but it's a sign to pivot. Delivery, online shopping, and e-courses boomed, thanks to the crisis. This is the internet age. Businesses live or die by traffic. Today's world is Web 2.0. Whoever gets more attention makes more money. Platforms like YouTube, TikTok, and Facebook, with massive followings, are our chance to flip the script. We can do business in a place busier than Times Square without rent, inventory, English, or living in New York, yet still earn millions sustainably. Time's short, so we'll stop here. I share free insights on becoming rich, entrepreneurial, and an investor for financial freedom. If you don't want to miss out, subscribe, turn on notifications, and share this video to everyone who liked it. I wish you financial freedom soon. If you found just one or two helpful ideas today to improve your life, I'm satisfied. I'm Fortune, and I'll see you in the next video. Goodbye.